All right, well, our first panel discussion as part of this blockchain roundtable is called The Impact of Blockchain Businesses, the Present and the Future. I'm very excited by the speakers that we have here with us today. We have Tobias Bauer, who is the principal of Blockchain Founders Fund. Thank you for joining us, Tobias. Aashima Arora, who is the investments lead at Polygon, and Syed Musheer Ahmed, who is the director at Finstep Asia. Syed has kindly agreed to moderate this session. With that, thank you for joining us, Tobias, Aashima, and Musheer. We're very excited to have you and looking forward to this session. With that, Musheer, take it away.
Thank you, Mohan. Thank you, Mohan, and delighted to see DigitalOcean organize this. As Mohan has mentioned, I am with Finstep Asia, which is a company I founded in 2019. We work with blockchain and fintech companies on fintech policy and fintech go-to-market strategies in Asia. I'm delighted to have two leading speakers in the blockchain and digital asset world with Tobias and Aashima with us. I will request them to quickly give an introduction about themselves and their firms, and then we'll jump into the Q&A right after. So starting with Aashima.
Hi, everyone. My name is Aashima. I'm the investments lead at Polygon. I'm leading the $100 million fund that we have at a global level to support early stage startups that are building in the Web3 ecosystem, may or may not be building on Polygon. Coming to Polygon, Polygon is a layer 2 solution, just to keep it very basic. You can think of us as the AWS for Web3.
Nicely put. Thanks, Aashima. Tobias?
Yeah, thanks so much for having me. And then real pleasure to be here. So we are running Blockchain Founders Fund, which is an early stage venture capital fund in the blockchain space. We crossed our 100th portfolio company actually last week, which was exciting. And now we are very active in the early stage area across blockchain and Web3, but also blockchain non-crypto solutions, which are more, probably a bit more traditional in the current mind, but also quite important for us. And in addition to capital, we also work quite hands-on with our companies and help them sort of navigate through the challenges within their journey. And that has been quite successful. A lot of leading companies in the world have been backing the fund. And we also, are very excited to have a lot of leading portfolio companies in different areas, such as gaming or analytics, supply chain, and so on and so forth. So yeah, super excited to be here, and thanks for having me.
Thank you both. And as we see during the quiz and introduction that Mohan was running, quite a few of you are still getting an interest in the Web3 and blockchain space, and so may not have that necessary clarity on the depth of what's been happening. I think for a lot of us, even who are down the rabbit hole in the Web3 world, are still learning as new models and new technologies emerge on almost a day-to-day basis, if not on a weekly basis. So I'll quickly just start off with a premise on differentiating between blockchain, the technology, and digital assets and application, right? What everybody have more or less heard about is Bitcoin. It kind of dominates the conversation when it comes to talking about digital assets. But Bitcoin was probably the genesis number one of the assets that we saw bringing into the world the concept of decentralization and use of money, virtual currencies, right? But when you look at blockchain, that's an application that is a distributed ledger. Essentially, for those who are not aware, think of it a bit like a Google Sheet, where you're able to share all your information with different parties at the same time. And you can give different access in terms of providing permissions for them to edit or view only. In a normal Excel sheet, which is on your desktop, the changes that you make are only visible to you previously. But now with cloud as connectivity, you can see the changes in real time. The key, and you can look at blockchain as this massive Excel sheet that gets updated every 10 minutes. Key difference to a Google Sheet and a blockchain would be in a blockchain, you cannot go back and change any information. That's where the immutability concept comes in. Whereas in Google, you could go and change and the formulas changes, right? So, and the data also changes. So this helps people look at how the progress of any kind of data or any transactions has taken place, and you can verify on the basis of this. Now being distributed with multiple parties having visibility at the same time increases efficiencies. It brings in a lot more transparency and new business model. So I'm going to stop with the introduction of blockchain per se here, and I want to jump into bringing in Tobias and Aashima into the conversation, starting with Tobias. Look, Asia is seen as one of the major hubs for blockchain, as well as digital assets. As we have stated, blockchain is the technology very much like in the internet, while digital assets like Bitcoin and all other cryptocurrency tokens are an application that are funding or allowing economics on this internet, right? But Asia has proven to be a strong place, not just for development of blockchain, but also blockchain companies who have emerged from here, ranging from large exchanges, Binance, FTX, 100x, all of these originated in Hong Kong and China, and then grew to the rest of the world, to very well-known blockchain layers such as Polygon, who are originating from India and then moving on to the rest of Asia. So Tobias, from your perspective, what have been the key trends you're noticing in blockchain in the APAC market?
So we look at the blockchain space quite diverse, right? So I mean, we go through about 500 to 600 companies per month right now. They're not all from APAC, right? So we're looking at about 40%, 45% deal flow from APAC, 30 to 40% from the US, and the remaining sort of is distributed across MENA and Europe. If you focus purely on APAC, to be honest, a lot of stuff has been in gaming, right? And it's still in gaming. Like the whole game for applications, the whole play to earn, especially where we get a lot of stuff from Vietnam, which isn't yet very strong. I mean, there's a lot of very interesting projects, but we haven't actually invested in one of them. In Singapore, we're looking at a bit more in the DeFi space so far, which is mostly also driven by, bigger banking adoption going into that space right now. Where we also look at a lot more infrastructure stuff, which we don't see yet from any other markets, right? Indonesia, for example, where we actually don't see a lot of deals at all. Most of the stuff is similar to Pin2, which is more, just purely enabling the access to cryptocurrencies in the first place. And then if we go into the Philippines, Manila, where I'm currently actually based right now, which is for the next 2 weeks, is where it's also quite sort of on the lower end. I mean, there's a lot of stuff in gaming happening just because Manila is also the core market for the big play to earn games such as Axie and Splinterlands, right? Where like the majority of the users are actually coming from the region here. But we do see a big interest in the population getting into crypto. I was actually quite surprised across even very early markets like Cambodia, but we still already see a big interest in the crypto space. So summarizing, basically, it's a very fragmented landscape, and I think that it depends a little bit where we look in the APAC region. But I'd say predominantly it's been driven by Singapore, where like the more sophisticated solutions have been reaching us, and then like across other areas in Southeast Asia, where we still look at mostly at NFT marketplaces, GameFi, and like more on off-ramp, sort of enabling the access to crypto. That's kind of like what we see at the moment on a high ground level.
Thanks, Tobias. Aashima, I'm going to bring you in at this stage to probably help the audience understand two things, right? One is the transition of what we all speak about as a Web 2 to Web 3 transition, right? Essentially, what is that transition and how is Polygon building this AWS layer, as you mentioned, right? So what are layer tools and their utility and in Web 3?
Got it. So I think before I talk about the Web 2 to Web 3, I'll just kind of at a high level, sort of explain what we are, talking about when we talk about Web 2, because like so many beginners here. So, when we think about Web 1, which was, let's say, the late 1990s, early 2000s, it was all about open protocols, access to internet for everybody, community governed, and entirely decentralized. In that case, most of the value that was being created was accrued to the edges of the network, which was your users as well as your creators. Web 2 is when, like the post-Google era is what we like to call it, which is like between 2005 till today, of course. It is more about siloed, centralized services being run by gigantic corporations like the FANG of the world. Most of the value is accrued to them, not to the users as well as the creators. So now we are at the beginning of the Web3 era is what I like to see, which combines this, very decentralized community governance ethos of Web1 with this advanced modern functionality monetization of the internet, which is of Web2. So Web3 is basically the internet that is combining both, owned by the creators as well as the users, but orchestrated with a certain financial element where it is possible to monetize in the process. So that is basically, what Web2 to Web3 pretty much looks like. Now, when I talk about Polygon, Polygon is basically a layer 2 scaling solution. The idea is that on Ethereum, if you're building let's say like an app, like a dApp, in that case, you want to kind of scale up the number of transactions that your end users can do. The idea is that we basically provide that scaling technology through different products. We have a suite of 7 products that are, sort of currently announced, and a couple of them are still in the pipeline. So basically, the layer 2 platforms, basically something like a Polygon and protocols, they process data in a way that would decrease the burden on the base layer, right, which is Ethereum. So how does this happen? This happens by offloading the transactions from the main chain onto the layer 2 platforms, so that the blockchain network, the fundamental network underlying, can handle much higher transaction throughput, right? Layer 2 basically allows you to just massively cut down on the data processing on the blockchain by running everything off chain. The base chain will still be obviously the ultimate, let's say, judge when there are, sort of disputes. But at the same time, layer 2 solutions will be required from a scaling perspective, even if you increase the network effect of the layer 1 chain. So that is why layer 2 becomes a very, very important gateway to actually give access to the projects that are being built on the layer 1 chain to the masses. So that's where Polygon plays a very big role. Musheer, I think you're on mute.
I am. This is 2 years and haven't learned yet, right? Zoom should have an auto unmute. But coming back, look, that's a good explanation for everybody to understand. I think one key element that I should have mentioned about Ethereum as a blockchain and why it's important was this whole element of smart contracts, being able to program actions on the blockchain, whereas the Bitcoin blockchain was essentially just collecting data and then allowing for transferring of Bitcoins, whereas with Ethereum, you could do a multitude of functions, and with layer 2s, you can add on and build over that. Continuing from there, Aashima, what would you say are the key investment trends you are noticing in India as well as globally when it comes to Web3, especially as well as from when you are as an investment leader looking to invest in companies, what are the key things you're looking at?
So I think from a trends perspective in India, I think Tobias very well comprehensively covered Apac, but just to, I think, add to that, I'm seeing a lot of DAOs and DAO tooling also being an emerging space at a global level, where there seems to be a lot of, deal flow coming from India as well. So DAO tooling is viewed as basically the SaaS of Web3, just to sort of, explain it to everybody, where you actually build out tools that enhance productivity and the work that is being done by a fundamental organization. So that is, again, like a pretty exciting space that we are seeing at a global level. I think, like Tobias mentioned, we are seeing a lot of gaming NFT plays. That is definitely there. We are seeing GameFi. We are seeing a lot of AAA games that are entering the space, even from a non-P2E perspective, sometimes even P2P as basic as basically the RMG version of Web3. We are also seeing, obviously a lot of guilds at a global scale, I think mostly coming out of Europe and the US. I think we are also seeing a bunch of DeFi. So we had DeFi summer back in 2020. Wherein, sort of all of the innovation that exists in DeFi today began. And we are still seeing that continued trend, but this year we are hoping that we'll see some sort of a DeFi winter. Because of, again, like there are so many different white spaces that exist within the DeFi landscape at a global level. So that is why we are very optimistic about that also. And then, of course, we are seeing a lot of different middlewares, infrastructure players at a global level, where I think the idea is to kind of build the back end efficiently so that the front end can scale quickly when the front end ideas actually come to the forefront. So I think this is basically what we are seeing at a global scale. From an evaluation point of view, that's basically the question that you're never supposed to be asking a VC. But of course, I think we do look for the standard the key metrics. The team, of course, becomes a very important aspect, especially at an early stage. We need to know that, it's more about the relevance of your experience into what you're trying to build, what kind of experience you've already had in the past where you think that working on blockchain is kind of synergist for you. And at the same time, I think we also look at the kind of vision that you have, what the underlying product is, the kind of market that you're trying to penetrate. How well do you know that market? How do you know about the competitive landscape? What has not worked in the past, which is, I think I tell everybody, know your history, which is incredibly important. And of course, I think from a perspective of like the business model side of things, in Web3, we focus more on the tokenomic side of things, which sometimes at an early stage is just too early to be evaluating. But at the same time, that becomes like an important factor. Same goes for the UI UX version. Let's say it's a game, so we look at the gameplay. So that also becomes like a very important aspect. Being a gamer, I play every single game that I invest in. So that becomes a very important aspect in our evaluation process.
It reminds me of the old, in some sense, the old school way of investments, where the investors would go down to the store to check how a store is doing, and traders also do the same to kind of figure out, is this how it is? What's your experience before you put the money in? And that's probably changed in the recent past. Tobias, coming to you and building on this conversation around investment theses, right? We're seeing in the Web3 world in particular, a lot of startups early stage funding, raising a large amount of money, and growing rapidly as well. What are your key elements when you're coming in at the early stage? Number one is specifically what things are you looking for from the companies, right? We heard what Aashima said. I'm sure some of that echoes with you. And secondly is, how are you guiding them to utilize this funding appropriately, right? One of the elements we are now hearing is some of the big unicorns in the fintech world have shut down or are struggling or are downscaling significantly. How can we avoid that in the Web3 world?
Yeah, so I mean, Ash definitely said some very interesting points, which are just extremely key. I mean, especially in our stage, there's typically not a lot of financials you can build on, right? Most of the companies are essentially pre-revenue, or very soon might generate some sort of revenue, hopefully. But for the majority, it's just there's like 2-3 founders, right? They maybe hired a couple more people. They're building on the product side right now, right? And then they might have launched a token or going to launch a token. That's sort of the stage there, right? And some companies are just not crypto at all. Like they won't have a token at any point in time, right? That's a different story then. But basically, the majority, or like what you're actually betting on as an investor, is the founding team, more or less, right? And kind of like the vision they're having. So you ask the question, are these the best people in the world, or at least in that area, which can execute the idea they want to build on, right? And then, of course, what is maybe a bit different for us is we don't, I mean, the community is an important aspect in crypto, don't get me wrong. But I think that a product needs to come in on to help and make this community strong. And a lot of projects we see in the blockchain space right now is like where they're really putting a lot of effort in building community first, right? Then they do maybe some NFT drops to further, make the community stronger and also generate some revenue. But then down the road, then they're gonna start building a product, and then there's still like 1, 2, 3, 5 years until there's a fully finished product, which is especially important in gaming, right? We go into the other way. I mean, we are more concerned about if there's not a product yet than if there's a community yet, because community can build like around a strong product. You can essentially build a community much faster, or like even easier than you do it from scratch, and then help sort of keep the community alive over the product development cycle. So for us, it's really about like what is there from a product perspective, how strong are the founders, what is the domain expertise, are they the ones who have the right skills to access this. I'll give one example, right? In gaming, for example, if you look at founders, you might want to have one person who's been in just pure game development before, right? Because that person kind of knows what makes actually a good game. Because a good game, or let's put it as a weak game with token economics won't succeed, right? And that's a fact. Like, people want to play a game because it's fun and they want to play the game, and then they get incentivized by also earning some money playing the game. Otherwise, it becomes literally a liability on them, right? And then as soon as there's a better game with the same token economics, then they all switch and play the game, right? Because they can cash out their money and then, you know, get into the next coin and do it so on. So like, a game has to be fun. That's why we look from a founder perspective on, like, okay, who is a great person to actually build a game and what was the experience before? On the other side, we look from a person who comes from more of a crypto background, right? Who understands how communities work, right? Who understands how token economics work, who brings the right network to the table, to connect to, you know, other layers such as Polygon, for example, right? Or like, you know, other investors in the space, market makers, exchanges, launch pools, like all these things you need over the course of the token lifetime. And then we also want to see, not like proof, obviously, but like, we need to understand that they're actually able to pull this off, and like, we need to have the confidence and able to do that, right? That's just one example. In DeFi, the whole thing looks very different. You might want to have someone who's been in traditional financing, but, you know, has all the connections to all the big banks and makes it then very easy for them to sell any institutionalized products to, right? So you really need to think through, what do they actually want to do? Is that a big enough market? You know, that's like the first question. Second question is the product in a good development space to be, you know, sort of deployed or be ready whenever their internal timeline is? And then, do we have the right people within the company in order to make that work, right? And if not, if one of these points doesn't check out, then we need to ask, every investor probably needs to ask themselves if that's something we can bring in the value add, right? If they lack someone from the crypto side, maybe we can help them hire someone, right? But if they're targeting a wrong market, then it's obviously something which is not as easy to fix as maybe something else. Right, so we don't have like a checklist of like 60 points, and if 25 of them checks out, then we do the investment, right? I mean, sometimes it looks very, very different, and I think that's also the beauty of a blockchain and crypto, that like, there's so much more, you know, so many more other also soft points in the beginning and early stage investing, where you just need to be also creative as an investor in order to, you know, to make the best bets. And but like, high level, that was really something which worked for us, where we sourced, you know, Splinterlands, Luna Crash, a lot of big players in the industry right now. And I think, I don't know if Ash agrees, but like, that's kind of like how we look at the space, high level.
Okay, I'm very conscious of time, so I'm gonna, you know, we have a lot of audience who come from an enterprise perspective. Could we get you know, as succulent as you can be on this from both of you? What can enterprises do, or what should they keep in mind when they're looking to enter the Web3 world and partner, or, you know, natively build something on it? If you have any thoughts and views on how they can approach it. Aashima, starting from you, considering you're the AWS of the digital asset world.
Yeah, definitely. So I think from an enterprise perspective, it just ultimately sort of depends on where exactly you want to be, let's say a year, 2 years down the line, what exactly your vision is as an organization, as a business. You know, there are multiple tools as well as different kind of, you know, opportunities that you can explore within the blockchain space. But I think the fundamental logic begins that you need to get a good handle on, you know, the tokenomic side of things, at the same time, the market that you're entering. So for example, if you are, you know, trying to enter from like a community engagement perspective, you just have an idea that you want to do a DAO. You need to fundamentally understand what exactly decentralized autonomous organizations stand for, how to scale with DAOs, what kind of DAO tools will actually increase your productivity as a business. You know, what is the current competitive landscape? Maybe it just makes more sense from an acquisition point of view, because, you know, communities can be engaged very simply if they already have been together for a while, if they've been sort of, you know, working together and operating together for a while. So, you know, those are the kind of key considerations that you need to account for. There are a lot of these, I'm seeing tokenomics experts in Web2 that are sort of seeking these kind of enterprise roles, helping them pivot to Web3. Basically, you know, like 10 years ago, exactly what people were doing with like digitalization. So I think that is basically something that you can explore, potentially having those kind of people in your team that can give you the exact roadmap on how to enter Web3.
Thank you. Tobias, your views on this?
Yeah, already mentioned really, really good point. I think even before figuring out where you want to be, I think not every company in the world needs to use or engage in the blockchain space, right? So, and I get that this is currently, even the market is a bit challenging right now, but it's currently a hype, and like, you know, it's an interesting technology for sure, and it solves a lot of different challenges. But I think before you spend a lot of resources and you know, money and time of the team members, I think the key thing is really, does blockchain really help me in one way or the other, right? Is that really something I need to focus on right now, or is it just something I do because like the market is kind of like, or everybody's kind of jumping into it? If you have a clear value proposition of why blockchain is important to you and why it helps either your business or your clients, then yes, of course, go ahead. And then the question is, I think what, for example, Ubisoft is an interesting player because they come from a more traditional side, but they clearly see the use case of blockchain. And they've actually directly invested in a couple of companies, right? They formed a small venture capital fund, like a, you know, more, you know, corporate venture capital fund, and then they invested in certain companies, and then also like work with them in order to see what they can do for their existing business, right? And they also invested in, or going to invest in more, you know, fund structured entities, which is even more exciting because it allows them to get a even broader idea of what to do. So that's like one idea of like actually using investment to get into the space. And then the second point is, I think, you know, join certain networks, roundtables, as you do here, to really get educated and meet the people and also follow up. You know, I think network and community is something extremely crucial in that space, and you don't build it overnight. I mean, this is just not going to happen. But like if you put really some resources within your team in order to build your footprint in the space, that's the best thing you can do, right? And then you connect with the likes of Polygon more on the infrastructure side, because they have a really good overview about how the market and the landscape looks like. You can connect with some funds. They can show sort of what the industry is going through right now, but also, you know, connect with like people likes of, I don't know, Fireblocks or something, because they just all have a very good idea of what's happening in the market, like all the big players, and see not just so much from a customer perspective, but just building a network. And then, you know, slowly you will reach there. So there's like two different approaches, networking or investment. And I think both of this is quite interesting. But of course, if you already know what exactly you want to solve, then there might be a solution out there already, which you can tap into and just become a regular customer, or use best practices in order to engage.
Thanks for that. I think one key element that comes from both of the responses from Tobias and Aashima is you need to have a bit of a skin in the game, but that skin in the game doesn't have to be a large, you know, immerse your full hand and body, just test it out with your fingernails initially, but by just having a bit of skin in the game, educating yourself better, you may be prepared for it. Not all of Web3 is ready for large-scale enterprise deployment just yet. A lot of it is being built, as is the blockchain ecosystem. Some blockchain ecosystems are ready at scale and being deployed, especially in the payment world, as well as some other financial services applications and trade finance and, you know, supply chain applications. But we are seeing more and more applications being built. So please do keep that in mind. But it's hard to ignore, and series such as these by DigitalOcean are a big help. So we thank both Tobias and Aashima for their wonderful views and thoughts today. And I want to thank DigitalOcean for having us, and look forward to the rest of the session. Thank you, Aashima and Tobias, and over to you, Mohan.